Let's discuss what has happened over the last 10 days. Over the last 10 days, there has been a 7.5 rupees increase in the prices of petrol and diesel. Petrol in Delhi NCR is 102 rupees. In Mumbai, it is 110 rupees. The diesel cost in Delhi NCR is 95 rupees, whereas in Mumbai, it is 99 rupees. Because of these increase in prices of diesel and petrol, there has been increased cost of the goods, which is basically known as inflation. If there is a 1 rupee increase in the price of diesel, it is a 0.15% increase in the inflation. Because of 7.5 rupees, ultimately there is going to be 1 to 1.25% of the inflation. And whenever there is an inflation, the cost of the goods increased, you will be able to buy lesser goods with the same amount of money. So there are two types of inflation: CPI, which is consumer price index; WPI, which is wholesale price index. WPI is a benchmark for the businesses, CPI is for the consumers. If you see in the month of March to April, there has been an increase in inflation from 3.5% to 8.5%, because whenever the economy goes through high inflation period, RBI, in order to protect the consumers, increases the interest rate. Any increase in the interest rate is always going to translate your loans to be more costly. Because of that, there will be more EMI and you will be making lesser saving. And if you look at the businesses, they stop doing the capex because larger interest costs always squeeze the margin, right? And why all of this is happening? This is all happening because 85% of the imports of India are because of the crude oil, and 50% of that crude oil passes through the Strait of Hormuz. There are 3,000 ships before the war that was passing through the Strait of Hormuz to India. Right now it is 200 vessels. So hence there is a supply choke, and hence there is an increase in the prices of diesel and petrol. Government has taken that shock, which is around 30,000 crores till now, and now government is in a mood to pass that on to the consumers. Now if you look at the comments that is coming out from Gita Gopinathan, the senior economist of IMF, she has also mentioned the same thing, that the government should not take the shock because of the increased prices of the crude. The price of the crude has gone from $65 to $110 per barrel. So she has advised the Indian government not to take that shock, which the government is also is in a plan to pass it on to the consumers. She has also advised that the RBI should not manage the currency. So RBI in the recent past has started managing the currency a little bit because there was a bigger slide of the currency, and the rupee has right now reached around 96 rupees per dollar. The RBI has recently did an auction of around $5 billion where the banks pitched in for $9 billion. So there is a huge demand for the dollars. People want to reserve the dollars and use it for other purposes, right? In this particular situation, what exactly should you be doing? Number one, increase your emergency fund from 6 months to 9 months. Number two, what you should also do is basically repay the costly loans. Don't keep the costly loans with yourself. Number three, keep these SIP and investments continuing. You don't want to stop that. Pass this video on to your friends who is also going to take benefit out of these advices. Keep investing. Stay safe. Thank you guys.